All right, here we go. Just about 2 o'clock, right? It is 2 o'clock. Let's begin. So thank you everyone for joining this NinZa course presentation. And the topic is Big Trade Sweep. It's an order flow type of an indicator, but pretty advanced. We're going to talk about that in a minute. First of all, who am I? That's a very philosophical question. Who am I? So, I've been trading for a couple of decades. My name is James Buchman. That's how you can get in touch with me if you wish, if you have any kind of a trading question on pretty much anything has to do with trading. I do have my own trading room where I share my trading plan every single morning, and every single morning we find a way to be profitable. Today we're looking to buy. Today we did buy 72.86 in the S&P, and our target in the Nasdaq was on the downside 28,600 area, where we expected a bounce, and a bounce we got. So come and join me. Would love to have you guys in the trading room. We're doing well there. Anyway, let's get to today's presentation. And well, trading challenges. Do we have any trading challenges? Okay. So, big trade sweep. So again, this is an order flow type of an indicator, but what it does and how is it different than other gazillion different types of order flow indicators is that it does more than just analyze a given bar. It actually analyzes tick by tick, transaction by transaction. It looks to see who is in control, the buyers or the sellers, who is more aggressive, the buyers or the sellers, and then it gives it to you visually. You're going to see, let's see if we see any here. Well, this is back test. We get to that in a minute. So what you're going to see is you're going to see volume bubbles. Again, this is how the software analyzes the candle, not just the full candle, but tick by tick within this candle, looks to see who is more aggressive, who is doing more buying or more selling. It looks for continuation trades and for traps. So I want to cover this actually when we look at a chart because there is a lot there. This whole topic of who is in control and who is doing the pushing and for what reason. It's actually a pretty big topic. I'm not going to cover all of it. I'm going to cover some of it, but it's very useful to know if a particular bar, not only a cluster of bars, although clusters could also be useful, but per bar basis, who is doing the pushing? It's important in both declining market and advancing markets, and it often can tell a turning point, but perhaps in an unexpected way. So stay tuned. I will explain what I mean. Um, so again, this is your typical order flow, right? A whole bunch of these things. Uh, but Big Trade Sweep makes it visual. You have the colored bars, and you also have, I do want to get to those bubbles, these bubbles, because we will be looking at those. Um, so these tell you again, not only per bar, but per transaction basis, who is stronger in a given bar. And as I'm going to show you in a minute, uh, green bubbles don't only tell that price is going higher, it will also often tell you when the move ends. And it sounds counterintuitive, but give me a chance. I will try to convince you that it is a fact. Similarly, sell bubbles, while yes, would indicate some selling, but it will also could tell you when the move down ends. Okay, so yeah, stay tuned. It's going to be fun. So again, two main types of signals in this software: the trap signal and the continuation signal. Well, continuation is obvious, of course, right? The price going to continue going the way it's been going. Maybe there was a pullback, and then there was some kind of a confirmation, and price is going the way it went before. Now, what is the trap? The trap is actually um, I'm going to make the statement: most big moves start with a trap. Um, for example, if we're about to have a move higher, it will actually begin with price dropping low. In other words, the sellers are going to push and push and push, and then on this last push, price will reverse. Now, again, to understand why this happens might be beyond the scope of this presentation, but I will touch on it because I think it's very important. A lot of you might know it if you've been around for a while. I apologize. It's going to be a review for you. However, I'm sure we have maybe some newer traders um, who, uh, who think maybe these markets are fair. No, these markets are heavily manipulated, and this manipulation expresses itself in these traps. These traps are necessary for institutions. These are the boys and girls who actually move the markets. They need contracts, okay? They need contracts. For them to get these contracts, they attack areas of liquidity contracts and they move completely the other way. Oops, something happened to my connection. It appears to be okay. All right. In any case, I talk too much. All right. So, um, so again, traps occur very often at the end of moves, but they also signal beginning of moves. Continuation trades occur when there is already an existing move and price is just going to go higher. Now, I do want to start talking and looking at charts because I love charts. So let me get to a chart, sure, so I can share it with you, and we'll take it from there. So hold on 1 minute. All right. Okay. Find it in Zoom. 1 minute. Boom. Share. Here we are. Okay. So this is the S&P. All right. This is the S&P. So at first you notice a whole bunch of bars are just blank. What does that mean? Well, not much is going on in relative terms during those bars. Is there buying and selling here? Of course there is, but there was nothing exceptional, right? No side, there are no really intense orders that would kind of pique our interest here. I mean, yes, there was move higher, move lower, there was buying and selling, but then notice what begins to happen: selling, but price goes slightly higher. Um, now that is very well planned, and you need to understand what is happening here. The intention is to go lower. Okay, the intention is to go lower. However, institution needs more, they need more contracts. So as they are preparing to go lower, there are two types of retail investors here. There are some who are long and there are some who are short already. Well, there's no way institutions are going to want to share the move down with some retail traders like us. Here's what they do: even though selling starts, they're actually pushing the price up. Why? Whoever retail trader got short, they're going to get them out because they detect pools of liquidity here of stop orders. They need these orders. They need them. All right. So selling, and sure enough, there is a big move down. But take a look at something. That's when things get interesting. We have a move down. Remember what I said earlier? Moves begin and end with very intense buying or selling, depending on the direction. We started to sell from here. The smart money was short from here, all right? And they're pushing down, and it looks like they're going to sell again. So is there selling going on here? Oh, yeah. Oh, yeah. You can say, but how can you say that price went up? They first push down to then pull the price up. Very common. Happens every day. Happens multiple times a day. So moves begin, in this case, a short move, a move down, a decline, begins with selling and ends with selling. Here we have price that's going up. Now, unfortunately, the indicator didn't pick this up. I talk about this in my trading room all the time. I show it all the time. This is a trap right over here. They're pushing it again. What happens over here? Well, you might have some retail traders who are already looking to buy. Where there stops, below here somewhere. Okay? What do institutions do? They need to get them out. How are they going to do it? They're going to push the price lower. They're going to push the price lower. Get all those retail longs out. Get them out. Collect their contracts. And now pushing up. And now we start seeing buying. Okay? We start seeing buying. So again, a move begins and ends very often with the same kind of a thing. So in the case of selling, the move begins and ends with a sell. In the case of buy, very often the move begins with a buy and ends with a buy. This was it here. They go slightly higher, and then they sell off. Now, buying, right? Buying, this is buying. Here is another buy. But what happened? Here is what happened. Price goes down. So the first one is good, and then another push, but this was actually a push to sell. Price goes lower. Take a look. They bring it down. How does this down move ends with a sell? Right? It's very common. When I looked at this, I was trying to figure out how to best explain. This is actually very useful, but not in the way you might suspect. Because if this, from this point, because look, we don't know what's going to happen in the future, right? If we are here, we don't know what's going to happen next. Now, if they're going to keep on selling, that's fine. However, if all of a sudden they start going up, look out, this is actually a trap. They're going to push the price higher. So even if you take a short, you would immediately get out and reverse because you know they're going to be going higher. Okay, let's okay, buying, look at that, right at the top. So does this mean, oh no, this indicator was wrong, there was no buying here? No, there was. They pushed it through so they can sell. Okay, moves begin and end with the same kind of a signal. Now, when I say begin and end, obviously it's relative to a time frame. So a 5-minute chart is going to be very different than a 60-minute chart or than a daily chart, obviously. But markets are fractal in nature. So overall, they would be the same. But obviously, the intensity of it would be different. And the frequency would be different based on the time frame. Okay? Buying at the top. What happens? Selling. Right? Here is the selling. Selling. Now, in this case, even though this was a sell, already buying began to come in. Already here, there is a hint that buying is coming in. Buying, and this one results in a sell. So this is just now, and I guess there was some kind of news when I was getting ready. I was looking at this. This is obviously very intense. I would not be shorting this. This is obviously very intense. A lot of buying. I'm sure there is some kind of a news event here that took place. This is kind of where we are now. I would definitely be favoring the buying, but not continuous. In other words, the first one is fine, But again, as you're going to start seeing, um, the more, in other words, first, second, okay, but when you start seeing third, fourth, fifth, now it's a matter of time before one of these buy bubbles are actually a hint to reverse. Okay? This obviously is a hint to go long, but here is no good. This is going to go down. Here they are buying, and now if you're going to see another buying, I would be careful. The first one is fine, but the first one was really here. I mean, this was the one to catch. After this, so this was the S&P. Let's take a look at the NASDAQ. Let me bring the NASDAQ chart. Let me find it. 1 minute. NASDAQ. NASDAQ. Okay. So on and by the way, perhaps this template was given to me by ninZa. So I'm sure that the S&P I showed you was something I just put together, and I'm not very good with parameters, with indicators. Um, uh, to me, charts really tell a story. I'm always looking at the story that the chart is telling me, and so I don't necessarily focus on settings, but I know that settings are important for most people. So this is the one sent to be by ninZa. So this is the NASDAQ. Let me kind of make it bigger. So here on the NASDAQ, we can actually see so the decline that ends with a sell, but here you see the T. This is the trap. So here, the indicator actually tells you there is a trap. Price is going to go higher. So is here, but it caught the low. Caught the low. So you see how right before the trap there is a sell signal, not a sell. I shouldn't say a sell signal, a sell bar. It looks like there was a lot of selling that is happening, which is true. A lot of selling is happening here, but here is the trap. The T stands for a trap. And then price goes higher. Now, as price goes higher, once again, same thing we saw with the S&P, at the top, it looks like a buy. Weren't there buyers here? Yes, but not in the way that you think. It was the kind of buying that would push price just to get out all the shorts before they then bring the price down. And again, this one is a bit early, but again, the trap is sensed over here. The selling and then the trap a little early, but then there is a move higher. So here we go. This is the buying. This is the continuation. So I spoke about the continuation trade, and we can see it here. Let me make this bigger. Here is the C for continuation. So in other words, now that price cleared this area, the indicator expects a continued move higher. And look at this. This looks like okay, buying, continued move, but no. Take a look. Take a look. I mean, I'm not just making this up. I want you to see this. It's very important you see that. If you get nothing out of this presentation, at least get this. This is the liquidity sweep of this. In other words, some retail traders, and I guess enough retail traders to pique the interests of the institution, took a short here in this area somewhere with a stop where? Right above it. So what are they going to do? What are they going to do? They're going to push through this. They're going to take out all those stops, collect all these contracts to do what? To go completely the other way. Okay, so this is not something that happens once in a while. If you train your eye to look for this, you're gonna see this every day. Every day. I can pretty much guarantee it. Okay. Ah, now by now you guys are all experts, right? Selling. Should we go short? No, this here was the end of this move down. So the confusing part is, and I know maybe especially if you're a bit newer, um, so there is selling. Why is the market going up? Because it's not this kind of selling. This was just a push down and then immediately reverse to go up. We see it again here. Okay, so first what? First, oops. Okay. First, we have what looks like a buy, but instead price kind of goes sideways, comes down. Here it is again. This is not a sell. This is just a way to frustrate all those longs who are probably here somewhere, who are buying all along. You want to get them out. They get them out. This is the liquidity sweep of this. Okay. People who are long, what? They're very smart, those people, of course. We're all very, very smart. And we put our stops below these pivots. That's what we do. That's what they teach us, right? Well, they're going to go and they're going to take out all these stops. So was there selling going on? Oh, yeah, sure. Yeah, there was selling. Um, and now they collected to go higher. Sorry, guys, 1 second. Sorry about that. Now I lost my train of thought. Oh, we're going up. Okay, yeah. Okay, so we have selling of the high, selling, continuation move down. Now this time the buy came in a bit early, but still there was buying that started over here. This when they began to buy, and they were buying all the way. And again, by now you can pretty much recognize this, right? The last buy is what? Is this? Right? This is it. Here we go. What are we expecting to happen? Well, one of two things. If they can really break through this, we can have a sharp move higher. If, however, this is just a way to get more contracts for the institutions, we're actually going to see a move lower. Okay? Kind of like this. Here we go. Buying, continuation, buying. Now that's the news thing, the same as with the S&P. Once you see this, even if there are signals, I don't care what there is, you really don't want to be short this. This is not a fake move. This is not a fake move. This is when you don't want to short anymore. I don't care who says what. I'm not shorting this. This is just way too strong. I'm not shorting this. And see, the indicator caught this perfectly. It looks like a sell, but no, it's a trap. Okay, and the indicator is showing you here, no, 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 no. This is a trap. Don't even think about selling. You want to buy this thing because I don't even think they're done. However, they are creating some areas of resistance, so it is to keep an eye on. For example, what could happen? I'm not trying to predict the future, but what could happen is when price arrives here, we can all of a sudden see a green bubble, right? And then what might happen? Price actually reverses and goes down. Okay. Okay. So that's what I got. Let's go back to the presentation. Any questions, of course, you can ask in the chat. I'll get to the questions in a minute. Okay, so now we've seen all these. We've seen the sell bubbles and the trap signal. Okay, trap signal, the sell. We've seen ideally, I mean, when one comes after the other, like we've seen in the chart just now, when there is, let's say, a sell bubble, a bearish bubble, followed by the trap long, that's a great signal. That's a great signal because it can identify that the selling is not real, it's a trap. Great signal. Okay. Okay, so we spoke about the price move. We spoke about this continuation trade. We've seen the continuation trade. You have a green bubble with a continuation. Just again, always, always, always understand the context. Always look left, right? Again, if you learn anything from today, always look left. You want to look left. You want to see what's going on the left. Never just follow something blindly. Understand that no indicator has a true understanding of markets. We as humans do, uh, or at least we try to learn. But so always look left. So of course, this by itself, so this indicator doesn't necessarily have to be your entry indicator. This could be a map for you. This could give you some kind of a bias. For example, right, if you see numerous, let's say, green bubbles, and then there is a green bubble at the highest high, and all of a sudden price is reversing, it's going down. Now, let's say you have an indicator that at the same time paints for you a short signal. This might be the confirmation you need that indeed it's a good time to try and short this market that's probably is gonna go lower. Okay, so this is just suggested settings from NinZa. Like I said, the Nasdaq chart was their template, and I think it was better than mine, the S&P, because I did not see any trap signals in the S&P, and NinZa's template actually had trap signals, and for me, I guess I love the trap signals. I because it's so obvious. Now, eventually, you can just do it with your eye. Once you train your eye for that, you can just see it happening. Um, but it's nice when there is some kind of a confirmation from an indicator. Okay, so we've seen all that, right? Selling that eventually leads to a trap, and then price goes the other way. Here is again, you see the kind of a buy at the top with a trap signal to go down, and price goes down. All right, so this is the offer for today. So looks like $250 for BigTrade Sweep with a $200 voucher. And they have a bundle with a $400 voucher that's over here. And while you have this, let me take a look, see if there are any questions. Oh, crap. I didn't. Sorry, guys. Ah, you know, I apologize. I apologize. There we go. Okay, good. So what I was told is that you take a look at the cluster. Um, So what I was given, and again, this is from NinZa, okay? I'm not, this is their template, but you see how it says single bar? So this is a single bar. You can also look at a cluster. Now, I did not look at a cluster. I imagine you would again need to go over the settings here to make sure that it's appropriate for the market you are looking at. But let's just try. I mean, not gonna. So yeah, it's just too many bubbles, I guess. When you're looking at the cluster. Just too much, just too much. Now again, it's the same concepts, right? Selling, which is good here, but um, again, selling that ends with the last bar that price turns. So it's similar. I think the single bar was more effective, but I think it's only because the settings are not set up for the cluster. Just like anything else, when it comes to indicators, you got to take the time, which I don't have now, and just look at the different settings. to make sure everything is optimized the right way. So let me once again not mess it up this time. Go to this. Okay, so we can start, I guess, from here. Um, So this was the first hint that and again, you can see it eventually without anything once you train your brain to understand what is going on. You see a high, a high, a high, a high. Each one is slightly higher, but what the indicator says here, all of a sudden, there is extreme buying, right? There is something really strong here because look how gray everything is. There is nothing, like it's all gray, and all of a sudden, a buy right at the high. To me, it's a flag right there. Watch for a sell. Watch for market to start declining because of this. You see, higher, 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 extreme high, followed by buy. That's just no. They're gonna go down. So then we're going lower. So this is very quickly though. So again, a sell with a trap, a sell with a trap. Now, do you want to go look even before this? I don't know how back you want to go. Um, but that's I guess the London session. So I guess the first buy is fine. Here I would already be suspicious. Would already be, and there is some decline, but ultimately, of course, is at the higher highs here. There is still buying, there is still buying that starts to sell off. So it doesn't really. Now, what I think should be done, obviously, there is less volume during the London session than there is the New York session. Makes sense, right? So if you're trading the London session, you would need different settings as far as recognizing when a bar has some extreme buying or selling, because of the fact that there is less volume. Okay, so I hope that makes sense. And then we went over all this. Yeah, then we went over this. Um, what is interesting, and again, you see how gray everything is, like nothing really stands out until we get to some key areas, right? Key areas. And then all of a sudden, there is stuff that's going on. Uh, to me, to me, actually, beyond the signals, to me, this is the value for this tool. Okay, let's see if there are any other questions. Okay, we spoke about this. I answered that. Uh, okay, so looks like it. Let me once again. Where is my presentation? Okay, so let's share. All right. You can email me. Nope, that's not me. You can email me anything to do with trading. Don't email me with settings because NinZa can answer your questions a lot better than I can. All right. So thank you, everyone, and I will see you next time.